Well, I know that there won't be a correlation between the job number and ground beef, so that's one thing I can assure you.
All right.
But what I do believe is that the number will be in the high 100s, just like they're projecting. I think the 300,000 number is a little bit too far out there. We're seeing the economy's healthy. All the experts you've had on, from the economists to CEOs and the portfolio managers, are absolutely correct. The job number's never been healthier. I mean, earlier this morning, you guys were talking that maybe unemployment is too low. Could we have thought that would actually be ever have been said 10 years ago?
No, and I don't think that unless you're worried about financial markets in your stock portfolio, I don't see how it could ever be too low. You know what I mean?
It can't.
Because you want it to be, you'd like it to be zero, and you'd like people to be getting paid a lot more. Profit margins get hurt a little, but that's the offset for having such a strong economy to sell stuff into. Corporate managers ought to be able to figure out how to pay people more and enjoy the good times that you have in a rip-roaring economy. We shouldn't always worry about getting too hot, although we do.
Well, you can't continue to pay people more for the same job unless the demand is there. And we really have the effects of the global economy. I mean, think about before the Great Recession, when would the stock market have been really buoyed by companies that weren't profitable? I mean, there's really an interesting dynamic. So when we look historically back, we're looking at a stock market that has a lot of companies that don't make money and IPOs that have companies that don't make money. And in the 50s, 60s, 70s, 80s, that really wasn't something that took place. In addition, we've shifted where 50 years ago, a third of the workforce was in the union, and today the numbers show that maybe a third of the workforce is in the gig economy. So we've gone from a middle class that was built on union and pensions to a gig economy where there's no benefits and no pensions for these workers. This is a different economy than we've ever experienced in this country.
This is a very interesting point. You made it, but I'm going to say it without any type of editorial comment whatsoever. But the people at the low end are able to ask for more money now, and they'll leave a company and go somewhere else. And we're seeing that they'll get better. So Tom says that middle management needs to worry that companies are going to start actually getting better middle managers because people don't leave companies, they leave managers. And think of, I mean, the world would be a much better place with better middle management. Tom, have I got that right? Or
yeah, I've been saying that to you guys for years, Joe, is that the middle management is really the core of this country. And what we felt in 2001 when the bubble burst, we felt it in 2009 and 2010, is that when companies cut fat, a lot of it comes in middle management. And you've got to figure out, Amazon's raising the minimum wage for their employees or the hourly rate to $15 an hour. They're going to cut bonuses and stock options to people to pay for that. It's got to be coming from someplace. And usually, if you're going to pay lower level people more, the middle management's going to suffer.